With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB as we unpack the day and the week. I'm Andrew Gagan. Thanks for joining us. Let's get to the markets. And so it looks as though we're going to finish positively. It's pretty flat, in fact, on this late Friday afternoon. Bearing in mind, as I speak, I'll put a timestamp on this where about quarter past three, I should say, Eastern, so still 45 minutes to go. It could go in any direction, but at this point, looks as though we're going to be up on the week about 0.7%. And bearing in mind also, this is the last trading day of the month, and for the month, the ASX 200 is up 3.6%. Not bad, all considered, given particularly what we're seeing at an international level with that turmoil that's been unleashed by Donald Trump's tariffs. And then, of course, that does continue, bringing us to our three themes of the day. On again, off again. Very much the case with those tariffs, given we had yesterday the International Trade Court in Manhattan ruling that those tariffs were in fact illegal, that Trump did not have that executive power to deploy them. Whereas then today, this morning, we got a ruling from an appeals court overturning that. So they were back on again. That court battle is going to be ongoing, so that uncertainty remaining. Nonetheless, we did see Wall Street move higher, particularly off the back of a positive result from Nvidia. So monthly gains, that's how we're, as I mentioned there, we're going to end up around 3.5% plus for the month at the end of May. And slow shoppers, certainly signs there of lacklustre consumption in Australia as Australian consumers are reluctant to spend. The latest retail sales disappointing, coming in lower than expected. Let's get to those sectors that have been moving today, beginning with tech. That's been the sore spot, led by WiseTech, which is off around 2.5%. Xero also down along with NextDC. Zip also lower again today. Healthcare is fairly mixed there, although Ramsay Health is the pick of the bunch there, up almost 5%. And in the energy space, that's been on the move. Woodside, of course, been the big mover this week off the back of that approval by the federal government with the new Environment Minister giving the green light to a long-awaited decision there, in fact, for Woodside and the expansion of its Northwest Shelf gas project. Let's bring you up to date with the latest corporate stories then. And despite a net loss in FY25, ATM-operator and digital payments provider Findi saying the market opportunities in India remain significant, but it's the investors there, shareholders, didn't like what they heard, so down almost 10% today, those shares. Healthco REIT and its unlisted healthcare fund have entered into a short-term partial rent deferral agreement with HealthScope and its receivers. NRW Holdings has been awarded an infrastructure contract for Rio in the Pilbara, and Lynas Rare Earths gains on signing rare earths deals with Malaysia company, and Chorus in New Zealand submitting its 2024 fibre regulatory report, which shows the company was very close to earning its maximum allowable revenue. All right, let's unpack the week now. Joining us, as we do on a Friday, is Shane Oliver from AMP. Shane, welcome back. Good to see you. Let's begin then with Trump's tariffs. Are you there, Shane? Oh. Hang on, we're just waiting to get to Shane up. We'll see if he's there, but obviously, there we go. Shane, gotcha. All right. Thanks for joining us, Shane. Always good to see you. All right, let's begin with Trump's tariffs then. So, look, this is just a moving feast, isn't it? And now we've got a court battle underway. What are you making of it?
Well, to be honest with you, Andrew, I think it's a bit of a joke. Normally a country should be able to get its act together on these sorts of things, but clearly not. Earlier in the week, we had the new acronym, TACO, or Trump Always Chickens Out. So I think investors and particularly importantly countries are certainly starting to see Trump's credibility is rapidly declining. That may have, in fact, explained why China never contacted the US in the first place to get the tariff negotiations underway. But not only that, we've got this court issue. Just look at the roller coaster there. One day, a few days after the Liberation Day, the average tariff coming into the US had been threatened to be over 30%. So that was the high point, up from 2.7% last year. So from 2.7% up to 30%, that's the 145% on China and the other tariffs around the world. Then, of course, as a result of the flip-flopping and the backdowns by Trump, drops down to around 14, 15%. Now we've got the decision by the trade court, which, if upheld, would see that tariff drop back down to around 6%, because don't forget the sectoral tariffs remain in place. And then, of course, if assuming the appeal does work, then the tariffs all bounce back up again, and we've got more sectoral tariffs on the way. So, firstly, it's way too early to say this is all over, but I do think that this is becoming a bit of a comedy. Investors are looking at the US and thinking, what's going on? You've got the blowout in the budget deficit, blowout in foreign debt flowing from that, likely to get worse on the back of the tax bill, the One Big Beautiful Bill Act. If they don't have the tariff revenue because of the court issues, then that makes it even harder to fund. You end up with a bigger budget deficit. You've got the One Big Beautiful Bill Act with its Section 899 in there, which is threatening taxes on countries or investors from countries like Australia when they invest in the US because of perceived wrongdoing against American companies here in Australia, such as through the digital services tax and so on. That could threaten foreign investment in the US. You've got Trump attacking US universities and medical research and other forms of research, which is a key source of US economic technological advantage. All these sorts of things will, I think, lead to a rethink by investors about investing in the US unless common sense soon prevails. And it does run the risk that investors will require a higher risk premium to buy US shares, to buy US bonds, to buy the US dollar and so on. So obviously ongoing volatility. So far, so good though. Share market's not that far away from an all-time high. I just calculated it for the Aussie share market. We're just 1.6% below its all-time high.
It is quite amazing, isn't it, Shane? And clearly the Trump administration has that break or breakthrough mentality with the administration saying, look, either we'll win on appeal or we'll just do it anyway because we'll come up with some new executive orders. What do you make then of the moves, particularly with equities at the moment? Very much risk on. Is that justified?
Well, I think it's a bit over the top, to be honest with you. To some degree, it is justified because the tariffs that were threatened through March going into April are now a lot less severe, depending on what happens with this court ruling, or whichever way it goes with this court ruling, it looks less benign. There is that perception around TACO that Trump always chickens out. And so investors are thinking, well, global growth is still continuing. It's not too bad, not as good as it could be, but it's not a disaster. And in the meantime, I guess when you look at tech stocks in particular, we had the NVIDIA results out the other night, up almost 56% earnings growth, similar revenue growth. So it's still shooting ahead. And so therefore, there's this sort of perception that even though there's a longer term threats, that the earnings story is still a fairly positive one. So that's sort of what explains it. But I do worry that share markets, particularly the US share market, is not allowing enough of a risk premium given the threats to the US from Trump's policies. And therefore, we can still see a lot of volatility in the months ahead. That said, we are so close to a record high. It was about 3% down in the US from a record high in Australia, about 1.5%. And that it wouldn't at all surprise me if we do go through that in the next few weeks. But I think the near-term outlook for the next 3 months is going to be one of continued volatility. If you take the tariff story, lately this week we've got good news. But even if Trump loses the appeal, he can apply those tariffs via other means under the so-called Trade Act. I said, was it Section 232? You keep hearing these numbers. Section 301 could apply those tariffs just as he has with the sectors. So there could be a lot more news on this, which could cause continued volatility. So I think it's a bit too early to say we're out of the woods yet, but so far so good.
Shane, let's turn to Australia. A bit of data out this week. Of course, we had that monthly read on inflation, which was slightly elevated. Today, though, we got retail sales. I mean, are you seeing there perhaps consumption as remaining quite lackluster at this point?
It certainly is. This data this week, I mean, it has been pretty depressing. You know, we had obviously the retail sales numbers out today. You can see there that my colleague Mibu actually calculates what you call real retail spending per person, the red line there. And you can see it was tracing out a nice recovery until later part of last year. Not a fantastic one, but at least it was going up. The red line was zigzags, but trending up. Lately, though, it's gone back down again. The trend has been back down again so far this year, and we're back around where we were a year ago. So it looks like consumers are still struggling, still seeing it tough out there. Obviously, we all know, economists all know, that falling inflation is not the same as falling prices. So the cost of living issue still remains a big constraint. So that, I think, tells us the household sector needs more support from RBA rate cuts. Then, of course, on Wednesday, we got very weak construction numbers, housing construction going up at least, but business construction going down. Then we got the CapEx data, also very weak. Combined, you can look at those numbers there. The business investment outlook, the blue line, has gone back to basically flat in terms of expectation compared to a year ago. So that's pointing to a fairly bleak outlook for business investment. Not great if we want to see productivity growth. And also the two of them, weak consumer spending, weak business investment, not so good for March quarter GDP growth. And then finally today, we also got some weak numbers for home building approvals, probably mainly due, I reckon, to backlogs due to the extra long weekends we had, the Easter and the Anzac weekends combined, so that slowed down approvals. So I think that'll probably bounce back. But the other data tells us the economy, the recovery that we're expecting in Australia has slowed a little bit. And I think it adds to the case for another rate cut from the RBA. So we had the CPI a little bit stronger than expected, still going in the right direction, still within the target range, so that's okay. But then we get this weak economic data. When you put all that together, you know, the inflation numbers being in line with the target there, you can see the trim mean and the headline numbers both in line with the target, although bouncing around a little bit. That's telling us, I think, that you know, there's room out there for the Reserve Bank to cut interest rates, possibly as early as July. I think the July meeting is still live, but certainly by the August meeting.
Shane, great to unpack all what you're seeing at the moment, data-wise in particular. Thanks for joining us from AMP. Enjoy the week ahead.
Thank you. You too, Andrew.
Shane Oliver from AMP. Let's now get to our stock of the day. Now, that was Findi out with its results today. And our experts are Luke Winchester from Merriweather Capital and Junbei Liu from TenCap turned their attention to it.
Early in the year, they raised money, but just before they raised money, you know, they were going to make a lot of profit, and then they had the restructuring. You know, certainly just seems like the business perhaps isn't as you know, as mature as it should be. You know, and then just the execution, maybe we just need more track record. So
what would you, if you're there, would you hold it, or well, I mean, would you consider it at this point or not?
Yeah, look, if I have it, it looks like it's done well in the last few months. I would sell it. I would put into, there are so many other growth companies that's profitable, and there's so many opportunities out there.
And it's income that it goes through your profit and loss statement, but it doesn't necessarily come through as cash flow. You know, particularly stuff like FX and revaluation of assets. So I saw that. It means that I sort of don't quite trust the earnings figures, if that makes sense, because those earnings can then be inflated by these non-cash revaluations. So in the end, I think there's a lot of moving parts. I'll say a hold if you're there for the Indian IPO thesis, and obviously, you know, you're keeping track of where that timeline is. But for your average ASX investor, there's a lot going on here, and I agree with Junbei. I think there's easier places to be, less risky places to be.
Let's get to the winners and losers in today's trade, beginning on the green side of the ledger, and take a see if do we have those up? Yeah, there we go. Ramsay Healthcare, along with Fisher and Paykel doing well today. Also, those gold miners, they're back again today. It's been very volatile, of course, with the gold price moving higher again overnight. On the negative side, let's see if we've got those up. PLS, IGO, look, lithium miners are under pressure. They have been over the past few sessions. In fact, Liontown also on that, along with Lottery Corp and Megaports. All right, let's take a look at what is ahead for the week. Manufacturing PMIs. We've got the meeting minutes of the RBA on Tuesday. First quarter GDP, that'll be interesting just to see how the Australian economy is travelling and household spending for April, as well as the trade balance. Okay, let's recap where we're finishing for the day and for the week. We're pretty flat, just marginally higher on the day, almost 0.1% as we get towards the close. And looks like for the week, we're going to end up around 0.2%. That is the COB. Thanks for listening and watching.